Yes, people, how are we doing? Great to see you all. Great to see you all. Welcome back to today's stream number 2. We are live for the second time today, and of course, ready for FOMC. We are ready for the Fed to give us what they're going to give us, and of course, ready for the market to do whatever it wants to do from that point on. BPN, yo, how we doing? Like the stream, like for a rate cut. Yeah, you know what, mate? I couldn't have said it better myself. Make sure you do drop a big like on the stream. Got 31 people in already, so you guys are piling into the stream. We can get a very good number of likes coming into this. So come on, like the like button, hit the like button, do all that good stuff. Make sure. Let's try and get this to at least over 20. Let's get mic check. Let's see. Mic check. Hang on. No, should be fine. Should be fine. Mic should be fine. Can you confirm or deny? Can you confirm or deny? The mic should be fine. Yeah, okay, good. Just BPN's headphones. Stonksy, how we doing? Good evening. Debut, how we doing? NDX says cut program. I don't know what that means. Hey, you can hear me. Good. Justin, mate, how we doing? Great to see you. Do make sure you get your vote in on the chat as well. I've got a vote going on in the chat, which actually loads of people have voted on already. What do you think Bitcoin's going to do for FOMC? Do you think the move is going to be bullish or bearish? Let me know. Yeah, we've had a nice push up so far, haven't we? That was a nice squeeze. So yeah, let's see what we're going to be given anyway. Personally, I think we are going to push up now. I think this was all the de-risking / whatever you want to call it, de-risking, market sourcing liquidity, obviously push down before we get the announcement to obviously take out longs, trap some shorts. Yeah, I think we're going to push up. Sounding sensational, thank you. Come on, Daddy Powell. Yeah, come on, Papa Powell. Come on, give us the good stuff. I mean, we know what it's basically going to be. Retest for EMA, then nuke, says Justin. NDX says rate cut programmed in. Let's have a look to see where that is. So let's go to the 4 hour. Let's go to the 4 hour. Have I got any MAs on here? Yeah, I have that I can use. Let's see. Oh, let's see. So the 4 hour 200 EMA is just above 114k. Oh, sorry, no, it's not. That's the simple moving average. Hang on, there we go. Let me get the EMA up. Apologies. 113k. There we go. That's a bit better, isn't it? Yeah, there we go. So that's where that is. What Justin's looking at. Let me know, in the chat what you guys looking at. We are squeezing up quite nicely, obviously heading into that. So any late shorts are now getting punished and squoze like a lemon. Yeah, I realised. Where do we see Solana by end of the year? Oh, how long is a piece of string? I mean, that is the age-old question, Jose, innit? Where do we see a lot of things by the end of the year? I mean, where do you see Solana by the end of the year? Let me know in the chat. Let me know where you see Solana by the end of the year. I mean, I don't know. I'll be honest, I don't know. I was short Bitcoin, now I'm long, says BPN. Very nice. I mean, yeah, we're getting a nice squeeze now, aren't we? We're getting a nice squeeze, and we should have filled the CME gap. How have we not filled that? So we've actually still got some CME gaps still left open now. Remarkably. Somehow it's not been filled. What did we go down to on here? Yeah, so it's the premium on the CME in it. So on exchanges we actually did go down to 110.9, but because of this premium that has been on CME for ages now by a couple $100, the CME actually only went to 111.5, which is interesting. Yeah, we've had this premium on the CME for ages now, where it's a couple of $100 above crypto exchanges, and obviously, yeah, that's not moved. So we are, we're still a little bit. Our good friend Steve-O, who obviously a lot of you maybe jump in the chat and that. He gets a lot of good information from some people he knows in the industry. And he was saying the other day in the chat, because we were talking about obviously the chances on poly market and all that good stuff, that he's been told obviously as soon as / if SBF gets released from prison, Solana will take a massive nuke, because I assume it's believed that he still has a really big stash of it somewhere. So we'll see. I mean, if that ever happens, we'll see. Who would have thought Mr. Stonksy himself would be an ASMR influencer? Why? What am I doing ASMR wise? Oh, do you want me to do some of this? Let me do some of this around the mic. Is that good, James? Is that good? Tundra from the CSE Discord. How are we doing, mate? Yeah, great to see you, everyone. If you haven't dropped a like, do take a second. Go and drop a like on the stream. We're only at 15 likes. We're only at a third. We're only at a third of the likes. That's poor showing. Come on, take a second, go drop a like. It is free on your half. And of course, helps the stream out. And it only takes a second. Just scroll down, hit the like button, and done. We do have the rate decision coming out in 8 minutes' time. Now, of course, we know what it's going to be. If it's anything but 25 basis points, the market is going to go into a whirlwind of uncertainty and surprise. It is 97.8% expected that it is going to be a 25 basis point cut. And the only other expectation is a no change decision, which is at 2.2%. So yeah, anything other than a 25 basis point cut is going to catch the market massively off guard. And I mean, who knows what could happen from there, but we haven't, since the Fed started raising rates, the probability going into the rate decision, and this is obviously going back over 3 years now, 3.5 years since they first raised rates. All the probabilities that have been right on FedWatch have been the actual outcome. So there's no reason for us to believe otherwise now. It will be interesting to see what happens if in one of the near future ones. So obviously we've got another one in December and then January. So there's none in November. We'll have a break now until I think it's the 10th, ish, in and around that date of December. Be interesting to see. It'd be good for the, obviously, viewing as well, and obviously looking at the market. If we could actually go into a FOMC meeting where the kind of probability is split between two, and we don't actually really know what the Fed is going to do, that would be exciting more than anything. I liked you, Dave, because I love you. Oh, thank you, mate. Thank you very much. James says it's 1 a.m. and I'm going to sleep listening to you. Oh, mate, I love that. I'm sure your bird is loving that, innit? Listening to another man as you go to sleep. Yeah. I hope you're having a good time, mate. When are you back? When are you back from being out there? How much longer are you out there for? But yeah, obviously Bitcoin, we tumbled down a bit before. Obviously, the rest of the market naturally is going to. Saying that though, Ethereum, hey ho, Ethereum, that has had a nice push up, hasn't it? That has pushed up much harder than Bitcoin. Because as you can see, we are up on the day, 1.53% against Bitcoin on the ETH Bitcoin chart. So Ethereum coming at you fast. Very, very nice there. What else have we got? Solana's been strong today. Again, obviously, a lot of these have come back down because of Bitcoin's drop-off, but Solana was, and still is really, performing nicely in the market today, up 1.7%, while Bitcoin is down almost 1%. You've got Solana at 1.7, XRP, basically same figure as well. Some nice performance in the market today. Zcash making a good U-turn, up 9%. Asta -2, Apex -3. Pump, and a lot of these you can see have kept their strength today. Hype has dropped off a little bit, but Pump has basically kept all its upside so far, despite the Bitcoin drop. These have recovered quite well. What else have we got going? That's XPL down again. Anything else? We got DOT up 3%. Oh, look at that go! Look at DOT go. CAS up 5%. And I think that's basically in the Pi up 9. Peak's having a good day. Obviously, you regular viewers on the stream will know Peak. And that is pretty much it, innit? On the watch list, anyway. That is it on the watch list. Well, let's take a quick look at me. We've got 4 minutes to go. Strap in. Do get your likes in if you haven't. Let me go and close this. So 77% of you think that we are going to have a bullish move for FOMC. Yeah, let's go and have a look at memes quickly. We've got 4 minutes to go. And then, of course, don't go anywhere after the rate decision. Don't go anywhere because I will be staying on and I will be live for the press conference. So, obviously, Powell gives his speech at 1:30, and then we go on to the Q&A. Look at Trump. Trump is absolutely surging. This thing is going nutty, up 16% on the day. What else have we got going on? Fartcoin's up 4%. Pengu's up 3%. Obviously, we looked at Pump before. Mother Iggy is having a good day. Apart from that, there's nothing else really on my watch list. Dude, obviously the coin for doodles. But yeah, obviously we want to be seeing what Bitcoin is going to do. And what we'll do is should we go down to the 1 minute? Let's go down to the 1 minute chart. Of course, if you aren't signed up to Stonksy, you can do that. The link is in the description. I will put it in the chat as well. You do get full access to the indicator. You do get full access to the Discord server, the trading bots on BLOFIN, and of course, you get access to the oscillator as well. So yeah, if you want to sign up to Stonksy, the plans are on there. I've dropped it into the chat as well. What have we got? 6th of November. Oh, mate, yeah, nice. So you've got just over another week there. Are those bands Stonksy? I thought Stonksy. Yeah, the bands are Stonksy as well, yeah. Yeah. Yes, shits and gigs. How are we doing? Great to see you. Alt's due to get crushed again, as an FYI. Nothing new there. Asta. There's nothing really to look at on what site shows the data when released. Can I get full access to you? Of course. To be honest, I find it just quicker just looking on X. So I follow in my opinion, the best news ones to follow for like instant news release, but also just general, US economic news and US news around stocks and companies. This guy is fantastic for it, Walter Bloomberg. He just basically all throughout the day, he's just posting stuff about, what's going on, any emerging data with companies, obviously any economic data, just general data. So as you can see, they're tweeting about how much the shutdown has cost the US economy. This guy just is always on it, just straight away. The other person is, now they don't tweet as much, is something called DB News. You'll have probably seen it as well. DB News. But these, and just generally, other accounts as well, a lot of crypto related accounts will just tweet it straight away. I just find it quicker to get it from X itself than looking on something like maybe, FX Street or Forex Factory or wherever, investing.com. I just find it easier just to jump on X, and just obviously if you follow in some good reliable news accounts, that's just the best way to get it. But we have got it coming in 20 seconds. So let's get ready for it. We'll obviously see the Bitcoin reaction, and do remember, stay on, because we will be watching the Powell speech and then Q&A at 1:30. So don't go anywhere. Stick around. But yeah, 3, 2, 1, go. 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 I'm guessing there was no shock to the market. Let's refresh X. Okay, we're heading down a little bit now. Yeah, cuts rates. There you go. There he is. Before Watcher Guru as well, this guy. Really good person to follow. But yeah, they cut by 25 basis points. Ooh, that was a naughty little 1 minute candle, wasn't it? That was a naughty little 1 minute candle. Yeah, so they've cut, as expected, 25 basis points. Again, no surprise to the market. Is Stonksy an infinite money glitch? In relevance to trading, yes, it definitely really aids you in trading, in getting into trades, out of trades, monitoring the market, catching trends and momentum. If I would say it is an infinite money glitch, that would probably be not right for me to say legality-wise, but it's definitely worth getting into. And if you haven't, of course, you can sign up to that in the description. Yeah, hit the like button. Oh, it's Mr. Delta. How we doing? Yes. Other people may answer that for me, but yeah, I'm pretty sure that I can't sit here and say that. Nice try, though. Nice try. But yeah, anyone that does want to sign up to Stonksy, again, all the plans are on the website, and I'll drop that into the chat one more time, but it is in the description too. Does Stonksy work on altcoins and meme coins? It does, yes. It works on everything. It works on all of crypto, and it works on all stocks, indices, commodities, FX pairs, anything you can pull up on TradingView. It works on. So yeah, literally doesn't matter what industry it's in, as long as you can pull it up on a chart on TradingView, Stonksy Stonksy will be able to show on it. Yeah. So yeah, Bitcoin, all alts, obviously that are on TradingView. Stocks, your equities, gold, silver, other commodities, your pairings, your currency pairings. So pound, dollar, euro, dollar, all that good stuff. Yeah. Sol has 2 big red 1-minute candles, has it? Oh, well, to be fair, it did give a nice flush to the downside on the 1 minute. Let's see. Yeah, it gave a nice flush to the downside, Bitcoin on the 1 minute. But we didn't get anything surprising. And there we go. There's the pop to the upside. Back to 112. Back to 112. Here we go. And yeah, we're doing okay, aren't we? We're doing okay so far. But yeah, thank you to those that have joined the stream so far. Do make sure you give a big like if you haven't. And obviously, for anyone that's new, subscribe. If you are new, do make sure you subscribe. Come back. I do stream every single day, Monday to Friday, for 2 hours a day as well, covering US Open and any economic news that we get. So obviously, your CPI, your PPI, any other US data. I'm always live for that during them times. And of course, I'm live before and after US Market Open. So if you aren't subscribed, do subscribe, hit that notification bell. And of course, there's plenty of good content on the channel. But yeah, I do go live all throughout the week. Do you guys have videos on how to use Stonksy? Yeah, mate, check the channel. Check the channel. There's loads on the channel, mate. Yeah, there's loads on the channel. But also, when you sign up to Stonksy, obviously you get access to the Discord server. So, any additional help or direct help that you need can obviously come from one of the team, me or one of the other guys in the Discord as well. So obviously, there's loads of content on the channel. There's me streaming and all that jazz. But if you need any just direct questions asking or help or whatever, obviously in the Discord, it's a locked Discord. It's only for Stonksy users. You can just ask whatever you want to and need to in there as well. But we are just hanging around here while, of course, we've had the interest rate decision now. So we're just hanging around in here. Yeah, so we've got just over 25 minutes to go. Well, basically 25 minutes to go until Powell starts his speech. So we'll wait eagerly for that. And then, of course, we'll have his Q&A to follow as well. I will be doing a split screen as well. So don't worry, we will have the Bitcoin chart on one screen, on one side of the screen, and Powell's conference on the other side of the screen. Oh, look at this. Oh, that's nasty, isn't it? Oh, that's nasty. What's the S&P doing? The S&P is dropping a bit. Nvidia's gone crazy today, hasn't it? Absolutely crazy. But yeah, Bitcoin. Oh, look at that. Some wild 1-minute candles coming in, isn't there? There's some wild 1-minute candles coming in. Can we see some red, please? Oh, whiz. How we doing, mate? Great to see you. Great to see you. Do you know what, Wiz? I was looking at Nvidia before when it got to, what did it get to? I think it was, 210, 211 up here. And I was thinking, oh, should I really size in? Should I size in on the ETF now? And I haven't. So I'm just hoping that doesn't prove to be a mistake. I just kind of want to remain a bit more patient because it does seem like the whole TradFi side of things does have more upside. So I'm just hanging on for dear life in patience, hoping that we at least get a push to 220, 230. I mean, 250 would be mental, wouldn't it? But I was looking at it before, in and around 211, 210, and I was thinking, oh, should I? But I didn't. So we'll see. Hopefully that's not proved to be a mistake. But yeah, Bitcoin, we've had a flush down now. So we've had a flush down back to where we was not even that long ago, really. Back to where we was about 40 minutes ago. But yeah, obviously downside reaction so far following the rate decision. Now, of course, we just wait for Powell, and then we wait to see what the market's going to do afterwards. What's this thing doing? Is this thing going up yet? No. I am in on them as well now, Wiz. I am in on them now. The Gemmy. I'm in on the Gemmy. Yeah, let's see if we can get some kind of stability coming in now. Can we get some stability coming in for the bitty? And can we start pushing to the upside from here? We have had a good wipeout. When Justin pumping market. Justin said he was looking at the 4-hour EMA for upside. I want to see some blood. Where are you looking to bid with? Where are you looking to bid? I'm already long. I'm long from. I got stopped out on the earlier one that I did earlier today, but I am long again from 111.3 in and around there. Where are you looking to bid? Yeah, I'm long from in and around here. Really, I should have remained patient because I've had this zone drew out since the start of the week, in and around 111, and it was just sheer impatience earlier today as to why I longed it. But there we go. We're all human, aren't we? We're all human. But yeah, Bitcoin is just chilling, hanging around. ETH doing the same. Again, ETH has retained its strength so far over Bitcoin. XRP, Sol. Yeah, I mean, to be fair, there is a decent amount of altcoins out there that are showing nice strength, despite Bitcoin being down on the day. Wiz, hurry up and hook the market. My bids are in the J zone. I've said some questionable things on stream, but I'm not saying that. Yeah, I've said some questionable things on stream, but I'm refraining from saying that. But yeah, we do have Powell coming at us in 20 minutes, so we eagerly await that. Tell you what I tried today was the Pepsi Max gingerbread flavor, obviously for Christmas. Can confirm it's actually quite nice. Yeah, I wasn't sure whether I was going to like it or not, but it's actually quite nice. But yeah, currently we are just hanging around, aren't we? We're just chilling around. Do remember, drop a like, subscribe as well. The biggest thing, of course, is if you are new to the stream, if this is your first time watching for FOMC, do make sure you hit the subscribe button. And obviously come back. I am live every single day. Of course, put out some great content as well, so go and watch the videos. But yeah, let's see how many likes are we on. How many have we managed to get? It's 26, not bad at all. That's not bad. Someone pushes over 30. 4 of you guys pushes over 30. Come on. There's 4 of you watching at least. I know there is, because we've got 39 viewers. So 4 of you that haven't liked, please do me the honor and just go and tip us over the 30 like mark. That would be fantastic. Thank you very much in advance. But yeah, until that comes, we are just kind of hanging around, aren't we? The market is just hanging around, waiting for Powell to come and do his thing. And that's really all we've got going on so far. That's really all we've got going on. But yeah, no doubt we'll get some good volatility coming in as Powell speaks. Especially, I know a lot of people are waiting for him to start mentioning, obviously, QE. Question is TradFi already pricing that in? You know, obviously we've seen some great upside action in the TradFi side of things. You know, is maybe TradFi pricing in QE and maybe we get like a later Bitcoin reaction, a delayed Bitcoin reaction. We'll see what he comes out with today anyway. I got you. Oh, thank you very much, John. Thank you very much, John. What are we on? 28. Oh, so close. So close. 2 of you. Come on, there's just 2 of you left to go and like the stream. Just 2 people left to go and like the stream. Do it. Do it. Please. Yeah, we have got just over 15 minutes to go, so we can take a bit of a relax. What's this? We can take a bit of a relax until we get some action. There's nothing real else. I mean, I suppose what we can do. Let's go and refresh this. So the next FOMC meeting, so the one after, obviously the one we've just had, is in 41 days' time. And the market is obviously already pricing in the later ones. Now, as it stands, obviously we have just come out of the October one. That's done and dusted. So moving into the 10th of December, I was right on the date. The market now is pricing in 92.5% for a 25 basis point cut. So no 50 basis point cut on the cards at all again, as it stands anyway. You know, we've got a good, what's that, around about 6 weeks to go until the next one, just before Christmas too. So I will actually be wearing a Santa hat on stream all throughout December. So look forward to that. I'm going to try and see if I can find an orange one. If I can find an orange and white one, that'd be great. But of course, there is a slight price in for a no change decision in December. And then, like I mentioned, we do have one at the end of January. Now, that is a big weight in it. That is probably about 7 weeks, maybe more. I don't know. I assume it's about 7 weeks between the December and the January one. And then we are on a break throughout this February. And then can you imagine? Can you believe it? Then the third next meeting takes us into March already. Basically, you know, almost into April. That's how ahead that we're looking already. I mean, if we look at the January one, what are we pricing in for January? That it's a mixture between, obviously, and this will depend on what they do in December. But at the moment, it's obviously split between a what's that? What would that be? That's 75 basis points away. And obviously that's 50 basis points away. But again, you know, that could be a 25 basis point cut in December and then a 25 basis point cut in January to get us to that. This could be priced in as a 50 basis point cut for January. We'll just have to wait and see what we're doing on Bitcoin. So we've come back down in and around, obviously, where we settled later on this afternoon after dropping. We did have quite a fierce drop, didn't we? But we've come back in and settled in and around here. Do you think the 4-year cycle is broken and we will have an extended cycle? I want to see how the year finishes for that, to be honest. I want to see how the year finishes. It will all be dependent on how the year finishes, because you could say yes and no now, couldn't you? Because if you get, you know, if we get, say, another explosive November and we leg up again to, say, 140k, 150k, then I would say probably no, because I think that would probably be it then, in my opinion anyway. Because then we're basically tied in, aren't we, then to Q4 again, done and dusted. Yeah, it may have gone on longer a little bit, but, you know, basically it will be in and around the same realm. If we don't do anything, you know, imagine if we just hang in and around here, you know, in between like 108 to 120k, that kind of region. Then, yeah, I mean, you'd have to weigh it up then, won't you? And have to see going into next year. But I think it will depend on just how we finish Q4. Yeah, it was it was just a nothing burger, wasn't it? I mean, I think, yeah, to be honest, I think off the top of my head anyway, George, we have had more movement in when Powell's speaking. Now, of course, the main thing that people are going to want to listen out for, and maybe obviously what he'll get asked in the Q&A, is about QE. Which financial instruments does Stonksy work best with? I mean, depends what type. What do you like to trade? Obviously, Bitcoin works superb with. It works great with basically with all of crypto. In terms of stocks, it works the best on stocks on the higher time frames, because obviously we have that break, don't we? We have that closure on stocks for the majority of the day, and then on weekends. Obviously for equities, you can trade them in futures, so you can trade them in and around that. Works great on gold. Works fantastic on gold. We was looking at gold earlier on the stream earlier today. We was looking at it on gold. Works great on gold. Of course, silver as well. So yeah, MicroStrategy, Coinbase, and Circle, obviously the big kind of 3 crypto-related stocks, aren't they? Circle performing the worst of them on the day. What I do want to do is I want to add Jemmy to this. Let's see. I want to move Jemmy all the way up here, and we'll put that below Circle there. But yeah, Bitcoin is climbing back to the upside now. Tundra says volatility nowadays just means faster consolidation. I mean, in my opinion, this cycle should be labeled the cycle of consolidation, shouldn't it? Because we have had just super long periods of consolidation throughout the whole cycle since it started back at the start of 2023. When we got that initial impulse back up in January 2023. Since then, it has been a cycle of consolidation. We have had fast and aggressive impulses up and down, which have been, really quick and short bursts, followed by, just real lengthy consolidation. Now, why is that? Obviously you could maybe point to the fact that, the institutions and, with the ETFs are so much more involved now. You could maybe point it to the fact that Bitcoin is so, favored a lot more than altcoins. You could point it to a lot of things. But we do have 10 minutes to go until Powell starts to speak. So do make sure you are sticking around. Don't go anywhere. Yeah, do not go anywhere. Of course, if you do have any questions, drop them into the chat, or if you have any comments or thoughts or feelings, whatever it may be, drop them into the chat, and I'd be more than happy to hear what you guys have to say. But yeah, Bitcoin just kind of chilling around in it. We are just in this realm where it came into around 2.5 hours ago. So not that long ago at all. And we are just in here. Now, the CME gap isn't filled yet. We still have it open down to here. 110,990, which would, give or take Bitcoin on actual exchanges down to probably in and around 110,500-ish, because of obviously the premium that is on CME against crypto exchanges. So for that gap to fully close, we would need Bitcoin on exchanges to come down a couple of $100 lower than obviously where that gap is. But yeah, we haven't got long to go. We've got 8 minutes to go. So we'll see what Powell has to say. We'll see how Bitcoin reacts. And yeah, it should be quite an interesting time. Mag 7, you got Nvidia. Now do remember as well, today, it's quite an important day today, not just for the fact that we've got FOMC, but we do have aftermarket close, which is in an hour and 39 minutes. We do have Meta, Microsoft, and Alphabet earnings reports all coming in after US market closes. So that's 3 of the Mag 7, Meta, Microsoft, and Google all releasing their Q3 earnings reports tonight after market close. So obviously we have FOMC and we have, you know, all the fun that comes in with that. But do obviously pay attention to that once the US market shuts. Obviously, could cause some volatility for sure. But yeah, 7 minutes to go anyway. Seven minutes to go, so we've not got long. Of course, if you do have any questions, get them into the chat. If you do have anything to say, get it into the chat. It doesn't have to be a question. It could be anything, and doesn't even have to be really crypto related. If you just want to say anything at all, do get it in there. But yeah, not the biggest amount of volatility, but we'll see what brings coming into FOMC press conference in 6 minutes time. I will be splitting the screen as well, remember. So we'll have Bitcoin on one side, we'll have the conference on the other side. I just updated Sogso Trader View. Now the backgrounds are faded, not clear, green/red water by setting. Yeah, they are like this by default now. I think Dean was, yeah. So, do you mean the opacity of them? You just come and change that in the setting. Is that what you mean, James? Yeah, so if you want them like obviously a deeper color, just come into the settings, and obviously, you know, I assume you've got them red and green, but you can obviously customize them and just put them to 100%. Oh, no, sorry. No, you don't. I'm guessing, do you go the other way? I haven't messed about with this yet. Yeah, you go the other way. Sorry, you go the other way. So obviously for how deep you want it, put the number lower. So obviously 30, we'll put it in a deeper red and green, etc. Let me just stick it back to the original. But yeah, that's how you do it, mate. If you didn't know, now you know. If you didn't know, now you know. Come on, Bitcoin. Let's have some movement, shall we? Let's have some movement. Right, we've got 4 minutes to go. Let me turn this off while I sort the stream out. Let's see. Let me get rid of this. Let me get rid of this. Get rid of this. Get rid of... Bloody hell. Get rid of this. Start with it. Get rid of that. Get rid of that. I've got so many pop-ups on here that I didn't even know I had up. So let's get rid of this. What is that? I don't know what that is. Right. Let me pull this over. And get right. That's set up there. That's set up there. Okay. Right. There we go. Let me share my screen. See entire screen. Share. There we go. Right. So what I'll have to do is, because I'm sharing my entire screen, I'll just have to get rid of that. Just have to pull up the stream on my phone so I can read the comments. James, you're almost asleep. Good, mate. Good. Enjoy it. Enjoy the sleep. Am I soothing you to sleep? I hope you're gonna have a nice one now. Dave, look at launch coin. Rugged hard. What's the ticker? What's the ticker? Launch coin. Is this it? What's the ticker for it, Wiz? Is it launch? I don't know. Let me know what the ticker is, and I'll have a look. I wish this thing would start going up. Don't you? I wish this thing would start going up and stop going down. Launch coin. The ticker's launch coin. It's not on many places, is it? Is that the right one? Is that the right one that we're looking at? I don't know. Let me know. All right, let's get in. Let's get into the action. Right. Oh, let me zoom back in. Let me zoom back in on the chart. Hang on. Right. Let me turn the background. Oh, look at that. It's bloody zoomed in on my face. I'll fix that now. Right. Right. We want to zoom. There we go. Here we go. Here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside, risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced
What a 1-minute candle that is. Oh, look at it go.
With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting,
what a candle that was.
To conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in treasury bills, furthering progress toward a portfolio consisting primarily of treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the two goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, other people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the two goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
You know, I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. You know, I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, you know, some will be more averse to inflation overruns and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when participants go out and talk, they're very disparate views. And they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, you know, that we haven't made a decision about December. You know, I always say that it's a fact that we don't make decisions in advance, but I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the US Treasury issuing more short-term debt?
You know, that could be one of the factors, but the reality is we've seen, you know, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, you know, the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, you know, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice. And so there's not a lot of benefit to be holding on to get the last few dollars because, you know, again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, you know, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, you know, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
Colby. Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, you know, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested the labor market strengthening or even that it's stabilizing, you know, that would certainly play into our decisions going forward. So, and we do have, you know, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get, you know, job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market. And, you know, the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So, you know, we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views? Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
Just to follow up on the balance sheet, if you stop at the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in treasury bills, which will foster both a more treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long, but at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point, and that's the last point. Even then, we didn't make decisions about this today, but we did talk today about the composition of the balance sheet, and there's a desire that the balance sheet be right now it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint, but we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Janelle.
Janelle Marte with Bloomberg. How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation. But we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments. But so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs. And that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news, that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we'll expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple of things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that. And the thing about tariff inflation is the base case is that it will come and it probably will increase further, but it is that it will be a one-time increase. And, we've been very focused for all of this year at making sure that that's the case and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be, a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think, we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that? And especially when we're seeing potentially labor supply challenges.
Sorry, say the first.
The stubborn services inflation that you mentioned.
Services inflation. Yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer term surveys or market pricing, you will see that's a credible commitment. And there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up, you mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the beige book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Howard?
Howard Schneider with our Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about a continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
This is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate in this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs. And much of the time they're talking about AI and what it can do. So we're watching that very carefully. Yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are if you listen to the earnings calls or the reports of big public consumer facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower.
Well, there we have it, people. We had a big drop, didn't we? Which came and I assume we have filled the CME gap. Yeah. We filled the CME gap, well and truly filled it. So yeah, we got a nice liquidation to the downside, and we have bounced back up, obviously semi to the point of sell-off. But that's basically the end of it. Once you get half an hour in or so, the questions start to become less relevant. Obviously, anything he's got to say becomes less, of importance and an impact. But yeah, we had an aggressive sell-off, and then we have bounced back up to, near the point of sell-off now. Again, we see the conference being the most important thing, not the rate decision. You know, the rate decision was basically a nothing burger. But the conference itself, once Powell starts speaking, you know, once he starts doing the Q&A, gives us the big volatility. And yeah, hopefully you was able to catch a nice bounce on Bitcoin from lower down. If not, we'll see what happens when the tide settles. But yeah, big thank you for watching. Thank you for tuning in. I hope you enjoyed it. Of course, I appreciate you all jumping in. And yeah, we'll see obviously what we get for tomorrow. I'll be live as usual tomorrow at usual time. And yeah, thanks for joining me tonight. Enjoy the rest of your evening. If you're searching for positions out there or whatever, obviously just be mindful that after US market close, we do have Meta, Microsoft, and Google earnings reports. So bear that in mind for maybe some extra volatility coming in. But yeah, that's everything for the stream. That's everything for the FOMC show. So thank you very much for tuning in, and I'll catch you all tomorrow. Bye-bye.